markets got off to a mixed start on Monday. The outside equities, they were lower on much of the day as money moved away from them back to the U.S. dollar index as a safe haven move. Now, traders in the outside markets did not have much analytics to look over today, though later this week we will see the NFIB Small Business Index along with the latest retail sales in April. Both early estimates of those reports expected to be negative, but they should give us a fairly accurate barometer of just how well the business environment is handling the COVID-19 pandemic. Now that the U.S. dollar index is back above the 100 mark, that's started to put pressure back over on the energies as well, as we saw crude oil and several other parts of the energy market drop just a little bit on Monday. In the grains, that was a mixed market on Monday with corn and wheat lower, soybeans higher. Traders eagerly awaiting more data to come out later this afternoon and tomorrow. The first of that being the crop progress report, which will give us the latest on planting as well as emergence, which will be a key number to watch given the fact we saw that polar vortex send freezing temperatures across much of the northern plains. Tomorrow we'll get out the WASDE report, ending stocks, a critical number to watch there, as it's expected to be fairly large on corn and a slight increase for soybeans and wheat. Now, the wheat market today did see the latest USDA export inspections, which was fairly low compared to last week's numbers. Corn was right on par with last week, and soybeans actually saw an increase week to week. As we see, December new crop corn futures settled 334 3/4. November new crop soybeans settled at 858 1/2, and July Chicago wheat settled at 517 1/4. July Kansas City wheat settled at 475 even. In the livestock trade, from last week's gains, the bears came back this week and started to put the sells on. We saw even several live cattle contracts close limit lower, which will mean expanded limits tomorrow. Now, there was some news to try and rally the bulls on today. That's as well. Many analysts expect about 10% more of the packing to come back online this week, and we saw a very strong cash trade last week in the cattle. Just wasn't enough for follow-through buying, and now we do see a strong correction starting to emerge in the charts. June live cattle will settle 92.67, August feeder cattle will settle 132.67, and June lean hogs will settle at 60.27. That is a market update here for this Monday, May 11th. I'm Clay Patton. You have a great afternoon and stay warm out there. We'll talk to you tomorrow afternoon.